your vision, how and why it's inevitable for asset management moving on chain. Can you summarize that vision that you have?
Inevitability of asset management being on chain. I think that, quite frankly, that there's not 10 ways to explain it. It's quite straightforward. It's basically what you end up with. It's just better. Something is better and makes more economical sense. Eventually, we're going to get there. The question is how fast is that change going to happen? And so, when you look at the reasons why it's better, I think that it's important when we consider on-chain asset management is to consider what actually can be on-chain, right? So either you can have the full package where you have the entire investment strategy itself that is made on-chain, and then you have the fund, as a kind of the investment vehicle that is on-chain. You can have both together. There's really kind of the full package, and what we see in fully on-chain asset management, such as what the guys at Stakehouse are doing. But then you can also have something that is split, where you, for example, only have the fund vehicle and on-chain, but the strategy itself might be off-chain. For example, the kind of basis trade investment that you can have with Ethena. What is interesting to see is that if you consider those two scenarios, starting with the most vanilla one, so to speak, where the strategy itself is not fully on-chain, only the investment vehicle, the fund is. So how is that better? Like, why is it better if you deposit your money basically into a vault rather than a traditional fund? So from the perspective of the fund manager, you have something that is a lot more efficient. You have something that is a lot more costly. You have something where you can have live reporting, where you can have your entire cost of operation is going to be dramatically reduced compared to what you would have with a traditional fund. So you have something that is more efficient, therefore something that eventually is also going to be a lot less costly for the investors themselves. Now, even without considering this reduced cost, you look at it from the investor perspective. You deposit into a vault, okay, great. Why is it better than traditional fund? I mentioned the reporting, the transparency, but then also what you get as a token deposit is something that potentially you can use now. So, if I were to just invest into a traditional private credit fund, first off, my barriers to entry is about 5 to 10 million for a minimum ticket, which to some extent prices out many people. But then also once I have that, I'm an LP in the fund, that's it. I'm just seeing, of course, the performance, I'm happy about it, but there's nothing that I can do with, that share of the fund that I own. Now, if you have a token, actually the horizon of what is possible is dramatically expanded. And that's something that, you can use as collateral in DeFi, that you can use actually very easily trade and potentially get out of on secondary markets. So all of a sudden, just by having the investment vehicle itself on-chain, you have something, a product, no matter what the investment strategy is, right? Just the product itself, the asset management product to some extent, that is better, both for the fund managers, the curators in DeFi, but also for the investors and the LPs. So now if you look at it, even going a step further, you have the entire strategy that is on-chain, right? There, the benefit that you get in terms of transparency, in terms of liquidity, in terms of ease of rebalancing is just dramatically increased. And I think that what Kevin just I guess, pre-announced regarding what these guys are going to be doing shows that like the ease of distribution and transparency that you get is simply unmatched, compared to what you would have in traditional funds, where yes, you have of course, some reporting, some visibility, but that is much more spaced out in time compared to what you would have in a fully on-chain setup. So long story short, it's simply a better product. And that's the case whether it's fully on-chain, whether it's half on-chain, no matter what the investment product itself is, you have something that is better. And so that's why I think that it is something that is completely inevitable. And basically what I'm saying here for asset management is a bit more forward-looking, but it's basically the exact same discourse that anybody would have had about stablecoin 3 or 4 years ago. It's simply a better product. It is inevitable that we go there, and we're starting to see the same thing with asset management. Yeah.
Right. How long? So what's your timeline for this shift? How long does it take to happen?
So I'm notoriously very bad with timelines. Even I think a couple of months ago, I made a post, about tokenized equities, saying that it's the end game for tokenized equities to have natively on-chain equity, right? And that this would realistically be 3 to 5 years away. And so, of course, I made that public announcement 3 to 5 years. 2 weeks later, NASDAQ comes out and say, now we're doing these hybrid solutions. Like, goddamn, this is moving much faster than I thought. So I would stick with asset management still to kind of a 3 to 5 years horizon. I do think it's going to be much closer to 3 than to 5, most likely to have this shit, because again, we have more and more clarity. We're seeing all the different bits and pieces of infrastructure that are being built. Of course, there's still some work to be done, but as we've just seen on the previous panel, this has dramatically improved. And again, the end result is simply something that is better for all the parties involved. So I do think it's going to go relatively fast.
You mentioned clarity, and want to ask you that. How do you see the regulatory clarity, like on a regional basis? So you are mostly active in Europe, but also active you have office in the US.
Yeah.
So if you can compare those two.
Well, I think that my answer to that is dramatically different now than it would have been potentially 9 or 10 months ago. I think we had some clarity faster to some extent in Europe, right? With MiCA, there's some clarity in a framework that's still very insufficient because we're talking here about the inevitability, of asset management being on chain. If you look at the MiCA framework, it's like, oh great, we have clarity. DeFi doesn't even exist. According to that framework, it's never is the notion of on-chain even mentioned. So there was clarity early on, but something that still has significant gaps in it. Now, if you look at the US, then the picture is a bit different, right? Because up until last year, there was a complete lack of clarity, a lot of regulation by enforcement, as we all know, and then things dramatically changed. So first, things changed around January, where there was all of a sudden a very big clarity on the mindset. Saying, okay, we want to be the crypto capital of the world, so the direction was extremely clear. And then we've seen over summer with the Genius Act, with the Clarity Act, this mindset being actually translated into actions. And so I do think that now, if you were to compare the two, even though there was some clarity earlier in Europe, I think that very clearly now, like Europe has lost its leading position potentially in that race and is now scrambling to catch up because clearly the US is getting ahead. Yeah.
Right. So with that vision in mind, you have quite a big announcement today of the news. So can you talk about it a little bit?
Indeed, perfect transition as if it was planned. No, indeed. So as I say, we do believe that inevitably all of asset management is going to be on chain. So when you have such a strong conviction on an opportunity, on a trend, it would be a bit of a shame to not take part in it. And so, as a firm, Keyrock, so we started really on the capital market side of things, and we started the company 7 years ago, focusing on market making, on spot market predominantly. I think that our key differentiation there is that we've never been a hedge fund. Keyrock has always been a service provider. We've always worked to build a very strong client franchise, working with token issuers to provide liquidity on centralized exchange initially, but then on decentralized exchanges as well, as we're very active on chain. And everything that we've done has been built around the needs of our clients. And so over the last 7 years, so we've seen most of our clients that are already very actively involved in digital assets as foundations, as liquid hedge funds, VC funds, high net worth individual, family offices, and the like, always ask us, guys, there's already a lot of relationship here. There's a lot of trust. We would like to be able to, basically invest in Keyrock products. And so if you combine this real pull from clients, from what we see on the market and this inevitability, it just made sense for us to actually launch, Keyrock Asset Management, Asset and Wealth Management. And so that's something that I'm very happy to announce that we're launching today, and not doing it alone, but actually through the acquisition of Touring Capital, which is a Luxembourg-based, alternative asset manager that we're acquiring today. And so the Touring team is going to join Keyrock and become Keyrock Asset and Wealth Management. And so we're very happy of that launch, and very happy for everything that is to come, because I do think that is an inevitable trend very clearly. Thank you.
So with that, who's the target group? Who are you servicing with the wealth and asset management?
Well,
business line.
So I think that for us, we the focus, of course, is going to be still a somewhat institutional and qualified investor target. I do think that our purpose is to be able to offer investment products that would be suitable to the greater possible audience. Where we're starting here is with two products. So one is a pure alpha market neutral product. The second is a smart beta product. And of course, our purpose as we continue to grow and build this with the touring team is to continuously expand that product suite to be able to address as large a market as possible. Clearly, we have an existing distribution network to some extent through our capital markets activities. So working very closely with foundations, with treasuries, with as I mentioned, different types of funds. So we do think that there are some very clear kind of cross-selling opportunities there. So definitely something that we want to seize. But longer term, this is the targetable market is the same as just traditional asset management. Is going to be one and the same thing. So I don't think that down the line you're going to have on-chain asset management on one side and then traditional on the other. It's just going to be asset management, and it just so happens a big chunk of the pipes and kind of the infrastructure is on-chain. And so I think that eventually the market that we want to target is that one. I think it's 1.5 trillion market, and that's what we're going to eventually be going after.
Right. Why do you think why not other market makers are moving in this direction, or are they moving in this direction?
Well, I imagine that would be a question for them more, but they've notoriously made a lot of bad decisions in the past, so that might be one of the reasons. Now, I think that there's many. When you say market maker, it can be a very broad term that encompasses many different firms with different objectives and different ways of working. I think that without speaking about how others are doing things, how we've built things is to really be, focus on our clients and really being a service provider, building a client franchise. And it just so happens that the first service that we were providing was indeed market making. But the way we are doing things is to really develop our offering based on the needs of our clients. And so I think that this is a very strong part of our DNA, which might explain why this is a direction that we've decided to take. Yeah.
Right. You also filed for a license in Liechtenstein. Under MiCA. What does that mean, and how does that help?
So
Keyrock.
So basically now with this, the Turing acquisition, we of course want to to build and focus our activity on the alternative fund management. We do see that with MiCA, and we do see a possibility to evolve and broaden our offering towards portfolio management and advisory, which is something that we would do through the Keyrock Liechtenstein entity, which indeed we've applied for a MiCA license, and that's currently under review. So we do expect to have this multi entity strategy that would allow us again to cover the needs of our clients, but always being extremely mindful of the regulation in which we're active, of course.
Right. I want to circle back to the beginning of our conversation, and you said it's inevitable, and I want to challenge you on the aspect that what can prevent this vision to happen to asset management be on chain? What are the biggest risks for this shift to happen?
So, I mean, I think there are potential delays, potential barriers, potential frictions, but I don't see risk inherently to the concept itself. The question is just how long is it going to take, right?
Right.
There are many things that can make it slower. I think that if you look at digital assets in general, so we've been attending conferences and events for the last almost 8 years now, and 8 years ago everybody was talking about tokenized securities, like this is going to happen tomorrow. And so in general, I think that the industry has sometimes a very short attention span and really looking for tremendous change to happen on a very short period of time, and that is just big things just take time to build. And I think that's exactly what we're going to see with asset management. Things are not going to happen within the next 6 months. I think that the first key part is definitely the clarity, like the ability to know the rules of the game for large institutions to know that indeed they can engage with this new product and they can be active without having to take tremendous potential legal risk on the rest of their activities that inevitably at the beginning are still 99% of what the revenue or their interest would be. So I think that having this regulatory clarity is an absolute necessity, and one thing that we have seen the acceleration the acceleration that it gives again to stablecoin, for example.
Right.
We've seen with EY, was it like 54% of companies are from the survey want to engage with stablecoin, and they want to do it in the next 6 to 12 months. So basically they're working on it right now, 54%. If you had asked the same question before the Genius Act actually passed into law, what would that never have been? Probably maybe 35%. If you had asked the question September last year, just 12, that would have fallen maybe to 10%. So I think that the clarity, knowing what the rules are, knowing what can and cannot be done, what products can be offered to which client is absolutely key. Once we have that, I do think that the bits and pieces of the infrastructure that are still missing, that was mentioned before, it kind of naturally takes care of itself through capitalism. If we see that there's clarity, there's a willingness to engage, we see that there's more and more demand for diversified set of products, the different bits of the infrastructure are going to get built to facilitate it. And so I think the question is just about how long it's going to take. But quite frankly, I don't see a very big inherent risk on it happening or not. Right. It will happen. The question is how fast. I think that we're now past the stage where it's an if, it's just about the when.
Right. Just thinking about if all asset managers move on chain, what will be the what can how can they distinguish each other from the competition? What can be the edge for any service provider?
Well, I mean, at the end of the day, it's about infrastructure, right? The infrastructure makes make to some extent all the products better, but then each product is still different. So it's going to be exactly, you might have kind of during this transition phase, you're going to have, of course, first movers, and they are going to differentiate themselves just by being them faster, by allowing, more utility to their products, by, having better distribution channels. But eventually, if you just say fast forward, 5 to 10 years, and that's the new status quo, the different, possibilities for differentiations are going to be the same as they are today. What I do think is going to be interesting is that the realm of what will be possible to differentiate yourself, the realm of potential partnerships, integration within different parts of the ecosystem between different service providers that collectively serve the financial benefits of a client. I think the number of possibilities would be much greater simply by the very nature, the composability of being on chain, and that's something that we're seeing already now. I mean, again, we mentioned a bit earlier, if you look at in the previous panel, you just look at on-chain lending, right? So it started DeFi summer. You have the first like Aave starting. You have just basic lending, and then all of a sudden you have a layer on top of it. If you have Yearn that comes out and allows you to aggregate and to kind of add a new layer. And now we have Morpho coming up that in the span of 9 months got to over 6 or 7 billions because of this ability to add a new layer of aggregation optimization. And I think that this logic of doing kind of yield on yield because of the composability of what digital tokens allow is something that is completely unique. So I think that this ability to do more and more will basically give more avenues for differentiation to different providers.
Right. A wrap-up question before let everyone to have lunch. What's going to be the next? So just looking from the outside perspective, what's going to be the next stage we will see happening on the road to inevitably being, every asset manager moving on chain? What will be, in the next year, what will happen? What's your prediction?
So I think that, a very nice way to make somewhat, forecast on what is going to happen in the next 12 months is to look at what happened over the last 12 months, right? And so if you look at what, digital asset management at large means for the last 2 years, what we had first is to basically with ETF, that was of course, a very big move where, all of a sudden to traditional a product, you can get access to a new asset class. And then we see this route going kind of the other way around, where we're bringing, traditional assets like money market funds, we bring those on chain, through tokenization. And then we continue to see the growth, as I mentioned, of, kind of yield aggregators. So that I think has grown over 100% over the last year. But the one category that has grown a lot faster actually is around actively managed strategies on chain. And so we've had, of course, here, a Stakehouse. We have players like RE7, MEV Capital. In general, I think the growth of actively managed strategies fully on chain, the capital deployed there has grown over 800% over the last 12 months.
Wow.
800% growth, right? And what is interesting is that when you look at it, if you look at the number of wallets, of addresses that actually deploy to these products, 55% are addresses with over 100K. So it's not fully institutional, money yet, but we're quite far from just the retail putting $100 and seeing what happens, right? So I'm really talking here about the number of addresses. More than 50%, 55% are over 100K. If you look at the value deployed, that's over 95% is already in large big tickets. So I do see that this growth is going to continue, right? And as you can imagine, what we aim to do with Keyrock Asset Management is directly aligned with that. We do think that the combination of our execution capabilities on the capital market side, the fact that we're able to trade on basically every single digital asset market from spot, futures, perps, options, on-chain, off-chain, being able to combine that is a very attractive kind of actively managed strategy. We think that this is definitely going to be a major lever of growth in the next 12 months, and hopefully one that we'll be able to to surf on and to actually lead if possible.
Awesome. Thank you so much for your time and patience bearing with me twice on the stage.
Thank you
congrats for the acquisition.
Thank you very much. Enjoy lunch.